Markets and tech are shifting rapidly. Chinese authorities are scrutinizing dollar flows in their banking system. Bitcoin's biggest corporate buyer is quietly stacking more BTC, and ChatGPT usage just bounced back with explosive growth. In this video, we break down what these moves mean for global finance, crypto, and AI. China's central banking authorities are tightening oversight on how US dollars are held and moved within the country's financial system, a reflection of broader concern over currency imbalances and the weakening Chinese yuan. Chinese commercial banks had previously seen a buildup of US dollar deposits approaching close to $1 trillion, driven by higher yields abroad and weaker yuan outlooks. Regulators led by the People's Bank of China have now instructed both domestic and foreign banks to cut dollar deposit rates and discourage speculative dollar hoarding. This policy shift has two key objectives: support the weakening yuan by reducing the appeal of dollar assets, encourage conversion of dollars into yuan, which can help stabilize the currency and support domestic liquidity. The backdrop here involves significant global monetary divergence. U.S. interest rates remain relatively high, while China's interest rates have been lower to stimulate growth. That contrast has made holding dollars attractive for Chinese savers and firms, but the PBOC sees excessive reliance on foreign currency as a risk, both to exchange rate stability and to the autonomy of domestic monetary policy. In practical terms, banks have been lowering the interest they pay on U.S. dollar deposits, a strategic move to deter holdings and push more investment into yuan-denominated assets. This tightening underscores broader currency dynamics, particularly how countries respond when the dollar strengthens or when their own currencies weaken. It's not just a matter of FX rates. Capital flow decisions influence corporate investment, export competitiveness, and even geopolitical leverage. Meanwhile, in the crypto world, Michael Saylor's strategy, the company formerly known as MicroStrategy, continues to quietly accumulate Bitcoin even as markets remain volatile. Most recently, the firm made its second consecutive approximately $1 billion Bitcoin purchase, acquiring over 10,600 BTC at an average price near $92,000 per coin. This brings its total Bitcoin holdings to roughly 671,000 BTC, valued in the tens of billions of dollars. What's notable about these acquisitions is the financing method. Strategy funds purchases primarily by issuing and selling common stock. While large Bitcoin holders sometimes pause acquisitions in a downturn, Strategy has doubled down, buying the dip and increasing its reserve despite price volatility. This aggressive accumulation signals two major things: long-term confidence in Bitcoin as a store of value. Strategy is treating BTC like a digital reserve asset, similar to gold, institutional appetite for crypto exposure, even when short-term sentiment is weak. Critics argue that repeated issuance of stock to buy Bitcoin can dilute shareholder value, especially if prices remain depressed. But Strategy's leadership remains undeterred, viewing sustained accumulation as a strategic advantage. Investments like this can serve both as a hedge against fiat inflation and as a bet on institutional adoption of Bitcoin over the long run. Whether this strategy pays off depends heavily on future price trends and on broader market liquidity and regulatory developments. Switching gears to tech and AI. OpenAI's CEO Sam Altman says ChatGPT usage has returned to strong growth, topping 10% monthly expansion after a slowdown earlier this year. Altman communicated this rebound to employees in an internal message, noting that ChatGPT now has over 800 million weekly active users, a level that reaffirms its global prominence in the AI-driven productivity and interface space. Part of this resurgence has been driven by increased interest in OpenAI's coding assistant product, Codex, which saw a 50% weekly usage jump, reflecting how developers are adopting AI tools for real work tasks. OpenAI isn't just sitting on this growth, it's preparing to launch an updated chat model, likely aimed at enhancing performance and maintaining competitive edge against rivals like Google's Gemini. It's also worth noting that OpenAI is experimenting with ad placements in the ChatGPT interface in the US as one revenue mechanism to support ongoing development costs. This rebound in monthly user growth underscores AI's resilience as a category, even amid economic tightening and technological competition. So what connects these stories? From currency policy and crypto accumulation to AI platform expansion, we're seeing capital flows respond to risk, opportunity, and innovation. China's currency strategy reflects macroeconomic pressures. Strategy's Bitcoin buys show long-term digital asset belief, and ChatGPT's growth signals ongoing demand for AI tools in business and everyday use. If you found this breakdown useful, hit subscribe for more market and tech insights, and let us know in the comments which trend you're watching next.